Ryan Reynolds here for, I guess, my 100th Mint commercial. No, don't. I mean, honestly, when I started this, I thought I only have to do like 4 of these. I mean, it's unlimited premium wireless for $15 a month. How are there still people paying 2 or 3 times that much? I'm sorry, I shouldn't be victim blaming here. Give it a try at mintmobile.com/save. Whenever you're ready.
$45 upfront payment equivalent to $15 per month. New customers on first 3-month plan only. Taxes and fees extra. Speed slower above 40 gigabytes. See details.
Hello and welcome to Fintech Insider Insights. I'm Kate Moody, Customer Strategy Director here at Numberless. Today we have a very exciting interview with a financial services leader whose work has bridged fintech and incumbent banking. Kuba Fast heads up Chase UK. The US megabank launched its UK retail offering back in 2021 and in the last 3 years has picked up more than 2 million customers and £20 billion in deposits. Pretty handy. And the Chase UK brand has won a number of gongs at industry awards shows, including our own. They won the Consumer Game Changer Prize at last year's 11FS Awards. I mean, it's great to have you on the show for us, Kuba. Thank you for making the time. I'm sure you're pretty busy. How are you doing?
Well, thank you so much for having me. It's a great pleasure. I'm a big fan. So back in the early days, when we were a few dozen folks hidden behind a kitchen somewhere, I used to listen to Fintech Insider on my morning run. So there was this, energetic beat at the beginning that was helping get me in the mood. And then, in a way, when you're in the early days of building something and it feels just so far away, it was a bit of an inspiration to hear 2 folks, come on your show and talk about things they have built and they have been running for a while. Yeah, so very good memories.
Awesome. I mean, we're definitely going to use that. We're just going to claim credit now for everything Chase has achieved. It was built off the Fintech Insider soundtrack. That's what we're going to claim. Obviously, I'm pretty confident most of our listeners will have heard of Chase in the UK, but maybe if we assume some of our listeners have lived under a rock and are just coming to this the first time, what should they know about Chase UK? What is Chase UK?
Right. So Chase UK is a digital bank that launched in September 2021 with primarily daily banking and savings proposition. And as you said, we've had a decent run since. We're over 2 million customers, 20 billion of deposits, a bunch of industry awards, and we keep going.
And I guess, let's maybe step back to 2021. What was the reason that drove 2021 to be the time for you guys to bring Chase to the UK? It was a busy time, right? The fintech scene in the UK, already pretty crowded. Monzo, Revolut, Starling. What made Chase think now is the time?
So JP Morgan is a towering institution, right? We have the biggest and best corporate and investment bank in the world, the biggest and best retail bank in the US, 70 million customers, 50% share of households, and so on and so on. So naturally, folks at some point would start asking, well, do we want the biggest and best retail bank outside of the US? And I'm sure it was an ongoing discussion for a while. And back in 2018-19, where the idea took hold, I think folks got to a conviction that the tipping point is there. The level of maturity of digital banking, the level of readiness of customers, the level of sophistication of the regulators, and so on, were at a point where we were ready to take a plunge as the firm. The UK itself was a choice for the first step into the project. Big market, very sophisticated, very high level of digital adoption among customers, a regulator who has a high degree of comfort and facility with understanding these business models. And of course, it's a country where we've been for 200 years and we have thousands of employees here. So it does hold a particular place in our hearts. So all that pulled together basically led for the UK to be the first place we would go.
Okay. Yeah, and it makes a ton of sense. And obviously, as you've alluded to, JP Morgan as an entity already had a presence in the UK. How significant was that in facilitating you coming to market here with Chase UK as a digital bank?
It's massively facilitating, right? And I would say both the presence here in the UK as well as the presence in the US and the scale of the firm, you get a whole ton of infrastructure to start with, right? And I mean infrastructure not as in just, desks and buildings, but you have your, the risk functions and compliance functions and HR functions and finance and, so that's one. You get immense amount of expertise that comes from all the nooks and crannies of the firm, starting with all the experiences we've had in the US, which of course to some degree they translate, to some degree they don't translate, but also all the footprint we have globally, where we may not be participating in retail banking, but we have our ear to the ground, we know what's happening, and so on, right? So that these things were massively helpful to us, and with JP Morgan broadly being a high-performing firm internally, and I say this, I still think of myself as a newcomer. I joined 5 years ago, and it is a massively well-performing firm internally, fantastic culture. In a way, we didn't have to shield ourselves from it, right? Like with many of the projects of this kind that are started by big banking groups, there's a little bit of let's keep it on the side so that people can go at a different speed with a different culture, whatnot. Like that completely wasn't the thing for us, right? I think the firm had the comfort of operating across different businesses, different styles of operation, and the underlying culture, the underlying substance is very, very healthy, right? We've also hugely benefited from a really tremendous long-term orientation that JP Morgan takes, an understanding that retail takes years and years to build out, and there will be ups and downs along the journey, and that it comes with a big investment, right? That you will see the returns to only over time. So that was another benefit for us, and I would say, lastly, it does matter a lot for your brand that you're coming out of a robust, multinational, global, sizable banking institution.
Yeah, no, absolutely. And that was very clear, I think, in your sort of campaigns when you first came to market, that you were really trying to work out how to bring the weight of that established brand with you. Like how did that play out? Kind of how much of a challenge was it for you to balance that identity as like a new market entrant with also wanting to lean on that heritage and that established brand as well?
I don't think it was a trade-off, right? I think it was just a combination in a way. We quite intentionally didn't play into this tension between, hey, I'm a new entrant, therefore I'm different, I'm rebellious, versus I'm an established bank, therefore I'm more traditional sounder and whatnot. The idea was we are a sound, robust institution that is a new entrant into a market, right? And I do think that played out quite well for us. And by design, this wasn't a strategy where we say we'll start from a fringe, right? Again, this is a fairly common pattern, right? Whereas as a fintech, as a new entrant, you start from a fringe. Usually early adopters, younger urban populations. These guys are easier to acquire. They're more on the lookout for innovations. They're more on the lookout for new things. But then that population exhausts itself at a certain point. And there's in Silicon Valley literature, there's the trope of crossing the chasm, right? And I think that the chasm becomes a problem between your early adopter populations and your mainstream populations, right? So the thought for us really was, we want to be a digital bank for adults. Or maybe to put it in a less polarizing way, we want to be a digital bank for a mainstream audience. Yes, a little bit more affluent. Yes, a little bit more open towards digital, but really fundamentally a mainstream audience. And I think that therefore the positioning of coming from a mainstream, large, substantial, high-performing institution really, really supported that strategy.
Yeah, no, absolutely. And I guess, if my LinkedIn stalking is correct, and you mentioned joining JP or Chase, which I don't know how you would label yourself, which organisation you joined, but in 2019, is that fair?
Yeah, that's right.
So what state was Chase UK in at that point? Like how early in kind of the build process was it at? Again, maybe give us a peek behind the scenes.
Very nascent, right?
Okay.
So I was there when the first line of code was written, right? So let's
wow.
put it that way, yeah.
And what were the main challenges along the way? Because obviously you've had a huge amount of success to date. I'm guessing it's not, you talked about ups and downs. I'm guessing it's not all been smooth sailing.
I mean, any project like that, it's I guess for those who are aware, the difference between type 1 and type 2 fund, right? Type 1 fund is the kind of fund that you're really enjoying and appreciating along the way. And that's kind of like, eating a donut or something, right? While type 2 fun is the fun that you really, really appreciate when you take a moment to think about it, right? Which is kind of maybe like running a marathon. I don't know. I never ran a marathon, right? So clearly building a project of this scale, and I'm sure anybody who's been incubating a business will probably say the same, right? That's definitely type 2 fun, right? So it is a lot of hard work. Right, and with all the resources in the world, with all the commitment in the world, it doesn't particularly become a whole lot easier, right? We did make the choice and the decision to build the bank from scratch, from the ground up. So the degree of reuse, let's say, of technology processes and so on from elsewhere in the firm is quite limited. Right, which then meant every single thing we built, we needed to build, with our own hands, on our own backs, with our own blood, sweat, and tears, and that was definitely a learning experience, and probably had a degree of complexity that we had underestimated at the beginning. Right? There's always a degree of optimism. I think Daniel Kahneman says nothing great has ever happened without a degree of overpromise. So maybe that degree of optimism is structurally required for a project of this nature. But we did find like it takes a lot more work and there's a lot more detail, and then there's a lot. Even all of us, who have worked for retail banks for a long time, like this was not news to any of us, right?
Yeah, no, for sure. I spend a lot of my time chatting to people that work in other big incumbent financial services organizations. It feels like getting momentum behind that level of tech change is really, really difficult. What do you think it was about JP Morgan that allowed you to take that approach to actually really, really start from scratch to the degree that you've described?
Well, we don't have a retail platform in the UK. I think that's an important element of it, right? If we were launching alongside a big established franchise, maybe that conversation would have gone a different way. So I guess it's as simple as that. Now, again, that being said, like I said, JP Morgan is a high performing institution that is comfortable operating across multiple businesses in multiple different ways. So I think that also made it straightforward, right? That yes, it's a new thing. We're going to build a new thing that in a geography where we haven't had retail before, and part of the thesis behind the strategy actually is building it on a new stack and on a new technology platform.
Yeah. And you alluded to earlier, I think, the role of the UK regulatory environment. Again, maybe we could sort of jump into that. How has that helped or hindered what you've been looking to do in these early years of Chase?
Mm-hmm. So, first of all, because the UK market has been quite advanced on digital and has quite a sizable footprint of digital banks, we think a lot of these small nitty-gritty type of challenges that you sometimes find in jurisdictions that don't have that level of maturity, hey, here's a random quirk in your, AML requirements or something that's very well suited for an in-person customer onboarding, while it may lead to some complexity or unnecessary maybe complexity in digital onboarding, right? That completely wasn't there, right? I think that's definitely one of the aspects. Generally speaking, the broad agenda, whether regulatory or legislative broadly in the UK, of furthering digital servicing, furthering openness of the financial ecosystem, for doing that alongside really, really keeping an eye on customer protections and customer outcomes and so on. So I think really creates a very, very mature environment, and it's always a lot easier to operate in a mature environment.
Yeah, no, that makes complete sense. And I guess if we think back to kind of when you first came to market, there were a number of things that you did differently. I'm sure we can talk a bit more on like the rest of the conversation around some of the kind of the commercial decisions you took. But interestingly, you were one of the first to have numberless cards. Was that a big thing? Did that just seem quite obvious to you?
No, it was. We definitely thought about it and spoke about it, right? We do, and as we do about everything, it seems. The underlying reasoning there was, again, we did want to be a mainstream bank, and I know that may feel exact opposite of what the move will suggest. But when we knew that compared to an early adopter population, there would be a number of barriers to adoption that a mainstream customer would have. Some of these are unavoidable, like, hey, it's a new thing. Okay, Yeah, that is a bit of a barrier always. Some of these things would be, well, where do I go to yell at someone if something goes wrong? Right, and the learning from that side, by the way, for us was we really wanted to have the best customer service in market, which I do think we've accomplished, and which actually I do think was a gap to a degree. But another aspect of that was security, and safety of your money is always a concern. The Numberless card, it featured in our first ad. This person snooping over somebody's shoulder to try to see if they can copy the card number, right? So was an element of underlining that, and we absolutely definitely get a very tangible, quantifiable benefit in terms of fraud protection out of that, right? So for any of the card nerds, right, we have 2 PANs, and you can decommission one independent of another. So if somebody makes a fraudulent purchase online, the physical card still works, and vice versa, right? You can do things like that, and you can also catch things like, well, if I see the card number that's only on the physical card, it's happening online. There's a purchase online. That cannot happen. How has that happened, right? So immediately that's a transaction you need to block. So there's that element to it. At that time, there was one big case of a Numberless card that was launched in the US. I don't know whether there were a whole lot more, but it did also feel to us that potentially, well, that's the way it will go. If you think about if you were designing a card from scratch, you probably wouldn't be putting in this day and age, right? When everybody has a phone in their pocket, like you wouldn't put a number on the card. I guess you wouldn't have the card at all, but if you did, right? If you did, you wouldn't put a number there. So why not? That did lead to some, let's say, small operational challenges that customers have in some contexts, where the particular merchant is really still dependent on having that physical specie in front of them. But I think on the balance, it was an absolutely a positive move. We wouldn't see this. It's not part of the value proposition writ large. It was more from the point of view of it's that would be the reasonable way to do it if you have the luxury of building a bank from scratch in a way, and maybe physical cards will go away at some point, right? I mean, always these things take quite a while, but in a way, it's kind of leans into a certain pattern that probably is ahead of us at some point. I don't carry a wallet anymore, right? So I don't. And I think I've only ran into a problem once, which was trying to pick up a package from a corner store, right? And they were like, "Hey, we need physical government ID." I said, "Well, can I show you my Polish digital ID?" No. Now, I wish we had more of that in the UK, right? It's an aside. Like in Poland, there's a law that says you have to accept digital ID in every place where you would accept a physical ID, right? And that's done wonders towards sort of furthering that infrastructure and let's say, allowing me to not carry the extra 200 grams in my pocket.
It makes a big difference, right? Yeah, no, I got burnt by trying to get some cash out the other day, and I didn't have my physical card with me.
Right.
So, yeah, no, you get those moments of frustration, right? You obviously talked about not having a UK retail offering as being something that enabled you to start from scratch, but obviously you do have a very substantial US retail offering. What have been how much cross-fertilization has there been between like the offering in the US and what you're doing in the UK? Is it a source of inspiration? Are you learning from that, or do you see them as quite separate?
Yeah, we're absolutely learning from that. Like it's a bit of a fire hose, right? You cannot not learn. You have the biggest kind of retail bank of the Western world potentially, right? And like you cannot not learn from that. And there is a lot of commonality, I would say, on a philosophical and strategic level in the way we do business. So of course we use the brand, right? And that again helped us. In again our first ad where it's like, who is Chase? This is who Chase are, right? And that creates a very immediate proof point. We broadly have a very similar philosophy of how you do business in retail, right? Which is it's a franchise-led, long-term effort where you over time want to stand on the reputation of providing excellent service, excellent quality of experience, excellent brand. and you do shoot for primary in-depth relationships. Now, that is not a particularly unusual philosophy in retail banking, but some people do not follow a different path, where they say, look, I'm going to do, a bunch of single product efforts and single product initiatives, and pulled together, they generate a business. And then we also do skew towards a little bit more affluent audience, a little bit upmarket, a little bit similar in the way we construct the positioning. Chase Sapphire is a massive thing in the US. Obviously, it's a very, very successful, very inspiring product. And that broad DNA of how do I go and create an offering for that kind of audience, and how do I think about rewards? Rewards is an important component for us, right? And was an absolute valuable input coming from the US, right? And then separately, of course, you have a big bank with hundreds of years of history. There is a good institutional memory of how things go wrong in many different ways, right? And how to protect against those. So that, let's say, risk management and controls, DNA and input was also very, very helpful for us. But then on the other hand, it is a business built in the UK. It is a business built for the UK customer, right? So we absolutely recognize that in order to compete and call it high street, even though there's no street for us, high street retail, right, really takes being very, very attuned to the market and understanding the differences in customer behaviors, customer needs, and so on and so on. And these do not translate across the ocean too much.
No, absolutely. I suppose maybe the last thing I wanted to touch on, I suppose just within that same topic, is this might seem like a distant memory, but I remember when I first joined 11FS, Fin by Chase was launched in the US. I don't know if you're a fan or not, but obviously it didn't last very long. Were there learnings from that about launching a digital challenger brand?
Yeah, absolutely. Yeah, so absolutely. Fin was a very interesting and valuable experiment in the US. The thesis there, I think, as I understand it, was largely around: does it create an alternative distribution model, right? Paired with a certain, let's say, different slice of targeting, with a different slice of, let's say, functionality in terms of how the front end of that product works and so on. And at the end of the day, the learning, I think, was we actually get that benefit by implementing a bunch of that stuff in the main Chase app, right? So the overlay of managing an additional brand, an additional funnel, an additional organization and product is not necessary. Let's put it that way.
Yeah, super interesting. Okay, coming up, I continue the conversation with Kuba as we look at what the future holds for Chase in the UK. It's all coming up after this super quick break, so don't go anywhere.
This episode is brought to you by Global X. Since 2008, Global X ETFs has been committed to empowering investors with unexplored, intelligent solutions. Global X specializes in exchange-traded funds that offer exposure to the artificial intelligence ecosystem, including themes like data centers, robotics, semiconductors, and cloud computing. To learn more about Global X's entire suite of ETFs, from covered calls, fixed income, emerging markets, and more, visit globalxetfs.com.
Whether you're starting or scaling your company's security program, demonstrating top-notch security practices and establishing trust is more important than ever. Vanta automates compliance for ISO 27001, SOC 2, GDPR, and more, saving you time and money while helping you build customer trust. Plus, you can streamline security reviews by automating questionnaires and demonstrating your security posture with a customer-facing trust center, all powered by Vanta AI. Over 7,000 global companies like Atlassian, Flow Health, and Quora use Vanta to manage risk and prove security in real time. Our audience gets a special offer of $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.
Welcome back to Fintech Insider Insights, where I'm chatting to the CEO of Chase UK, Kuba Fast. Before the break, we looked back at the Chase UK launch and discussed what it means to be a challenger within a major financial institution. Now we'll look at the tech driving their plans and what the future might hold. I think obviously, multiple interesting things that we covered, I suppose, in the first half of our chat. I suppose the thing that really jumped out in my head is you talked about the aspirations to become a mainstream bank. You talked about maybe your skew towards a more affluent customer base. Is that really kind of the target for Chase in the UK? You want to become that mainstream bank. You want to have that skew towards maybe that more affluent customer base? Because I can imagine a lot of organizations I've spoken to who will be quaking their boots at the sound of that.
I mean, that is the aspiration. At the same time, we know it's going to take years and years and years, and that kind of goes back a little bit to the long-term orientation that JP Morgan has that I highlighted before, right? It's going to take a long time. We recognize this, and we're going to get there step by step, and make progress every year, hopefully. But the end game for us is we want to be a leading institution in every business, in every market that we operate, and that includes retail in the UK. And we want to be a bank that banks, millions of customers in the UK across the broad range of their needs, right? So as long as we keep maintain our progress, one day I hope we do get there.
What's next on the to-do list to get to that?
Right. So I think we had a great run in terms of acquiring customers and seeing them maintain a very high level of activity and appreciating the offering, appreciating the quality of the experience, appreciating the service, and appreciating the offering we have in terms of rates, rewards, and so on. I think after these 3 years, we see ourselves having quite a substantial, active and engaged customer base within the product slice that we've offered. So for sure, for us, there's a degree of, well, yes, let's continue acquiring these customers and working with these customers so that they can have a deeper and deeper relationship with us. But of course, then complementing the initial current account and savings account offering with the next slate of products. And again, maybe that goes back to the point around building things from scratch. Takes a while. We've been quite measured, I guess, about the pace of introduction of those, and it is going to take a while. But I hope we do get there, and I'm sure we will get there, and it's all the usual suspects, right? I mean, if you go back to the mission statement of saying I want to bank millions of customers in the UK across the breadth of their needs, well, you can kind of start going by the list of products that a typical retail bank would offer, and maybe with some exceptions, but broadly, that's somewhere on the agenda.
Okay, no, that's a good hint. You've clearly invested very substantially in customer acquisition, lots of kind of headline-grabbing incentives you've offered to customers. I think the people that want to be critical of what you're doing, want to be cynical, would sort of say you're just buying customers. Mm-hmm. Is that fair?
So if you ask customers what's the number one reason why they stay with us, right? It's not the price or the incentives. They would say it's the frictionlessness of the experience, right? And this is exactly where we want to be, right? So ultimately, I do want customers, like in a good relationship, I don't want them to be in it for the money. I want them to be in it because they appreciate us. And I think that's absolutely playing out. Now, we do have to recognize that switching comes with a cost, right? Or behavioral change comes with a cost, cognitive cost, the actual effort you need to put into this, right? The feeling of like, oh yeah, I got to go around. Like, how many customers are there who say, well, yes, I really want to do it, but I haven't gotten around to it, right? So I am a big believer in saying, well, let's kind of put some more arguments on the table to nudge the customer over the line, and let's say, give them an additional incentive to join. And as long as you get the result you want in the end, which is the sustained depth of engagement and usage and so on, which we are absolutely getting. And then I guess there's no shame in marketing and giving customers value. And I'm sure many of the folks who would make the statement you make would do the same if they had the resources to do that, right? So.
Oh yeah, I have absolutely zero doubt. A lot of it comes from a place of a bit of jealousy almost of the spend that you guys have the ability to deploy. I guess the question that they would want me to ask is this a long-term strategy? for Chase. Are you guys planning to continue this trade-off between investing to bring customers in the door, but also kind of building out that, as you say, that frictionless experience? Do you kind of see those two things working together for the long term, or are you kind of hoping to wean off the incentives and really kind of rely on that experience to keep customers and bring them in?
I mean, there's, structurally speaking, if you want to compete as a digital-only proposition and so on, I don't see a reason why you wouldn't deliver more value to customers if structurally your cost base and your unit economics are better than a traditional brick and mortar bank, right? So this is a bit of a source of structural competitive advantage. So broadly, I generally see ourselves giving the customer a really good deal for quite some time and maybe forever. I don't know. Of course, when we were starting, there was an element of, are we even going to succeed? Will customers come? And, this feels like such a, tremendous effort and all that. So we probably did have a bias towards, let's put everything we can in there. Like, let's have a great experience, great offer, great service, great, right? And so on and so on. And like, probably it wasn't deployed in the most efficient way in every single place, right? So we're continuously thinking about how do we, reposition the way we deliver value to customers, how we reposition the incentives to target the things that customers appreciate, to target the things that end up mattering for them, that target the things that, of course, give us the outcomes that we would look for. So, for example, one of the big moves we've done, I guess big for us, was thinking through, can we shift part of the pie from transactional incentives, cashback, towards savings related incentives, and right, and that has worked well for us and has been received well by customers.
Yeah, no, absolutely. I was in a conversation fairly recently where we shared the amount that you've accrued in deposits over the time frame. And someone was like, how on earth have they done that? And I said, oh, well, I'm speaking to the CEO in a couple of weeks' time. I'll ask him, how have you built up that deposit base? What do you think has been the key driver for getting to that volume of deposits?
Right. And at the end of the day, it's everything, right? I think that probably would be quite difficult for me to attribute a single reason. It's definitely not price, or not just price, right? So because we know that there have been other institutions that have operated at a similar price or higher than ours, and the progress in terms of deposit build has been nowhere near to that. So it's got to be more, right? We do think that, let's say, the focus on brand rather than just, hey, here's a savings product with X rate was a big driver. The reputational soundness and the benefit of operating from within a big institution that can immediately be trusted, I think, was a massive driver of that. And at the end of the day, we have a fantastic NPS with our customer base. We were voted best British bank 2 years in a row. We came in at the top of the CMA survey this year, in the first year when we started. So I do think that also matters a lot, right? In terms of maybe magnifying the impact of our readiness to come in and say, yes, we will offer a good price to our customers.
Yeah, no, for sure. And I appreciate your focus at the moment is on the UK. Everyone is interested to see where you go next. You've talked about JPM as a whole having ambitions globally. Can you give us any hints?
Yeah, so we've made no mystery of the fact that we want this to be an international platform and an international institution. The ambition for us is, yes, we want to have millions of customers across Europe, right? And be across the big markets in Europe and aim for the same thing we would aim here in the UK, which is become one of the top 5 institutions, let's say, in each of the markets we're in. It's going to take a while, and then even once we do it, it's going to take a while for us to get to that level of materiality. And I joke sometimes this is the kind of project you can retire on. So because the in a way, if we maintain the strategic focus, the strategic orientation, and the objectives of the project, it's easily a sort of 30-year roadmap ahead of us, 20-30-year roadmap ahead of us, and let's hope we get there.
plenty to keep everyone busy. I guess, I'm absolutely not an engineer, but I assume from speaking to engineers, there's probably been trade-offs you've had to make in coming to market about building a platform that will allow you to launch in the UK at the pace you want to launch in the UK versus building a platform that could scale more seamlessly internationally. Has that been the case? Are you having to now kind of look at the stack that you've built and think through how you adapt that to set you up for scale?
Yeah, so there's definitely something there in the broad tension, let's say, in principle. We've historically always chosen to opt for the global scalability, right? So whenever faced with a question, is this something that will work in one market only, but get us to market 6 months faster versus build something for scale, we've always went in the direction of let's build something for scale, which I do think explains, that sort of the time we've been taking to roll out some of the capabilities. The degree of adaptation that we hope is relatively contained going into each subsequent market as a result. But the proof is in the pudding. Let's see, when we launch in the next market, I think we can look back and think through this. We are re-architecting all the time, right? So this is almost funny. We're a new bank, right? Like we launched 3 years ago. We are in a constant process of re-architecting and improving the platform and rebuilding some modules and so on. I almost think this day and age, like, that is the way it goes, right? Like you don't build a modern platform and by virtue of having built a modern platform, the platform remains modern for 20 years. Yeah, kind of doesn't make logical sense, right? Like you got to be changing it, and we are changing a lot along the way as we learn things, as we sort of find opportunities to do something better, or as we see that certain parts of the platform maybe don't quite meet every single exacting standards we may have, as we think about improving resiliency, as we think about improving the quality of service we provide to our customers.
Yeah. I suppose on the topic of resiliency, I think we're talking, it feels like constantly on the show around, the risks of cyber fraud, AI-fueled fin crime. How much does that worry you at Chase? How much is that influencing decisions you're making on the tech side and on the product side?
Well, the worry maybe is a wrong word, right? It's one of the risks that we manage as an institution, and banking is a risk management business. It is high up there among the risks that we do manage, right? So obviously we have a massive investment and massive deployment of resources, both in terms of technical, analytical resources and so on, as well as people who are day in, day out, working tirelessly to protect our customers. And that is a very, very rapidly evolving space, right? So obviously, again, this is one of the top themes that I would call out as a thing we watch for. And AI in particular creates a set of risks and challenges there that, at some point, if they reach a certain tipping point, may make the security model of some of the institutions that maybe have not thought about it with sufficient diligence, may make that model obsolete in a way. Clearly, this is a topic of social, political, public interest. We've just gone through the round of changes in the regulatory regime around APP fraud here in the UK, right? And I would expect more evolution to come, right? That the change as it stands, I think goes a long way towards protecting customers more. We would love to see it go further, right? So this is, I think, something that for sure is on our agenda. Okay, it's been a bit of a discussion of how much you pay back and who pays back, but it would be great to see also like how do we systemically stem fraud, right? And because it's done via from let's say from the nexus of the payment regulator, it does focus on payment institutions, but I do think there is a tremendous role to be played by non-payment institutions in stopping fraud. A grand majority of fraud scams originate in social networks, right? Social networks today, they monitor, moderate the content for criminal activity, child pornography, and so on and so on. I think that the similar level of scrutiny should be applied to an ad that, guess what, will look like it's legitimate because that's kind of how scams unfold, but actually completely isn't. And I think it's only fair to put incentives on those firms to also play an active role in preventing fraud. I mean, financial incentives literally be part of the reimbursement. We have then on the other side, so this is where fraud starts, then where fraud ends in many cases, there is some form of egress through crypto venues, crypto exchanges, and I think that's also a very important slice of the fraud value chain, if I can call it that, right? That needs addressing and requires, I think, a lot stricter and stronger incentives. And then lastly, there's also a very common pattern. Like, what happens if you are a custodian of a non-financial institution that stores financial data on customers and doesn't do a great job, right? And there's a very common pattern these days that you will have a data leak out of non-financial institutions, and whatever 800,000 card numbers make it onto the dark web. Guess what happens next? There's attempted fraud on all 800,000 of those numbers over the next subsequent 3 days or so. That puts tremendous operational strain for sure on any institution, any of the issuers, but also not all of it gets caught. Some of that always succeeds, even if it's a small proportion. And yes, there should be liability for that, right? Like, if you were not particularly thoughtful and prudent around storing customers' financial data, and literally you directly enabled wide-scale fraud and wide-scale evacuation of British customers' money, right? Yes, you should be on the hook for that. That's what I think.
Yeah. The other thing we've talked about a fair bit on the show recently are rumours around your credit card offering. Are you able to tell us a bit more about that?
Well,
have you got one in your wallet?
I don't carry wallet.
Oh, fair. I'll share.
Now, there's been folks saying we're testing a credit card. I can't comment on that, but maybe there are some employees that are doing something around using a different shade of blue when they shop. So that's obviously, again, coming from a towering strength of our credit card business in the US. That's obviously something we look at, and unsecured lending broadly is for sure an important direction for us. We are. It is not going to be, or at least for a while, we're not looking at a kind of Sapphire-like rewards-oriented card, which I know many of our commentators perhaps would expect. Right, our broad sense is we've met a slice of the reward-related needs with our debit card offering and a cashback on debit card. So for sure, the priority for us will be to uniquely focus on the borrowing need, right? So if there is a credit card coming anytime soon, that card likely would be a borrowing-oriented credit card rather than a sort of rewards credit card.
Entirely hypothetically, absolutely.
Yeah.
You've talked about a key strength of the business being the ability to look long term. I suppose we're coming towards the end of our time. I don't know quite what time frame is right to ask you about, but where do you want Chase UK to be in, say, 5 years' time? I don't know, what horizon are you working to when you kind of think about your ambitions for the business, and what are those ambitions?
I mean, look, if the ambition at the end of the day is to be a top 5 institution in the country, and not just in number of sheer heads, right? Like in terms of the, let's say, stature of the business that follows the customer numbers, like that is not going to happen in 3 years from now, right? So that takes quite a long time, and out of all the things that we have done and will do, probably current accounts and savings are the things where it's easiest to scale, right? And you do need to put all the effort into scaling your investments business, your lending business, and that just takes time. I can't quite give you a number either in terms of size or timeline, but this is not we don't have an illusion that we come back 3 years from now and we say, oh, okay, done, we're the top 5 now, and I don't think that's gonna happen.
I'm sure it'll be a pretty good party all the same.
Yeah.
What's most likely to what do you worry about? Again, you said maybe worry was not the right word.
Mm-hmm.
What do you think is likely to be the biggest blocker that you've got to overcome to make that a reality?
Mm-hmm. I personally do think that it really is just sustained execution, right? Like we're not the beauty of the business we've been pursuing, and also given the fact that it seems to be playing out the way we hoped it would play out, is that we're not reinventing the wheel in a way, right? We're just doing the same kind of wheel, just very, very, very well, or hopefully, right? So I think, a lot of us who joined the project in the early days, retail bankers, it was a bit of this, we don't want to do this new, hugely disruptive, different thing. It was, how do I do a retail bank? But like, if I really get the luxury of doing it really, really the way I would like it to be. So it's a proven business model. Right? So as long as if you have a proven business model that has had the initial resolution of uncertainty and that has struck a certain positive chord with customers, and is, customer acquisition is there, as long as you have the patience to continue investing and building and so on, and you execute well, like, I think you're bound to get there, right? And all kinds of things can happen along the way. I don't know, crisis, political changes, and so on. So of course, that exogenous risk, let's put it that way, right? That could stop us along the way theoretically, right? But I'm cautiously optimistic around the prospects of the business, as long as we maintain the consistency and we keep doing what we're doing, and for all intents and purposes, that's absolutely where we stand, right? We've committed to the market here in the UK. We have a long-term vision and long-term investment riding on the back of that. We've gone into a partnership with the home nations football teams for a long-term one, right? That kind of so this is not a speculative project in a way anymore, right? We're here to stay. This has worked, and we'll just keep at it, right? Of course, there's always the economic cycle that we need to be ready for, right? But then Jamie Dimon always says, economic cycles are like the weather. If you don't have an umbrella, you'll be in trouble, right? But if you have an umbrella, then you're fine. So that there's, as long as you manage this the right way, hopefully we can weather, no pun intended, those effectively. There are, some let's say, potentially structural challenges ahead of us as we scale and so on. But yeah, I think it's sort of patience and measured execution.
I'm pretty confident you'll get there. Sadly, that wraps up today's discussion. We've run out of time. A big, big thank you to you, Kuba, for taking the time to join us. Where can people connect with you, find out more about what you're doing at Chase?
Do find me on LinkedIn at Kuba Fast. That's Kuba, and fast, just like the word fast. And for any updates on Chase, and if you want to send me a message, also do.
Awesome. And you can find me, Kate Moody, on LinkedIn. Thank you so much for listening. If you like what you've heard, follow our podcast, and don't forget to leave us a review. It helps us to make it better and helps others to find this show. As always, if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider, or email podcasts@11fs.com. Thanks very much. Goodbye.
Whether you're starting or scaling your company's security program, demonstrating top-notch security practices and establishing trust is more important than ever. Vanta automates compliance for ISO 27001, SOC 2, GDPR, and more, saving you time and money while helping you build customer trust. Plus, you can streamline security reviews by automating questionnaires and demonstrating your security posture with a customer-facing trust center, all powered by Vanta AI. Over 7,000 global companies like Atlassian, Flow Health, and Quora use Vanta to manage risk and prove security in real time. Our audience gets a special offer of $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.